All right, let's turn now to the economy and the markets skyrocketing on Friday. The Dow, the Nasdaq, and the S&P 500 all up nearly 2%. Traders just thrilled by the Fed Reserve Chair Jerome Powell's comments on Friday, signaling an interest rate cut could be coming next month.
All right, we want to check in right now with Christine Romans, who's keeping an eye on all these different things for us. So let's talk about the interest rate cut, right?
Sure.
There have been a lot of people anticipating this, many people rooting for this for a while because it impacts everything that Americans buy these days, from homes to cars to any credit card bill you're paying for. What do you anticipate? What are we looking for? And how does it affect us?
So this is a big change in sentiment from the Fed chief and the Fed here that has been very cautious about lowering rates because they were so concerned about inflation. When you lower interest rates, you can fan inflation. We all know Americans are exhausted by higher prices. But the Fed chief signaling that fragility in the labor market, the job market, might be more important here. This would be a way to support the job market. And so that's why the Fed is signaling, not holding up a sign and saying it will happen, but signaling in the way it does that there could be lower rates coming maybe in the September meeting. So you've got a record high in the stock market. The stock market loved to see that. Looking at the labor market, that's really important here. You've got a 4.2% unemployment rate. And remember, that last job number was weaker than many people had been expecting. It was way less than any of the forecasts there. Look at that. We had 73,000 jobs added in July. They'd expected a lot more than that. That's the weakest kind of performance in the labor market in some time. And then, guys, what does it mean for all of us watching and having breakfast this morning? Interest rates have been higher than normal. You look at a car loan at 6.5%, or actually a mortgage at 6.5%, a car loan at 7%. You've seen student loans at more than 6%. These are numbers that will go down if the Fed starts cutting interest rates, and that will be relief for so many American families.
Christine, I also want to ask you about this news overnight. The White House saying it's going to take a significant stake in Intel. That would be a highly unusual move. They're saying it's about national security, but what do you make of that?
It is really unusual. I mean, the last time the U.S. government took a stake in a company, it was the financial crisis and the automakers were failing, right? So this is not a failing company. This company's been struggling, but this is the U.S. essentially very unusual. Even the Commerce Secretary is saying this is historic, turning the CHIPS Act investments that the Biden administration had started that were being funneled to these domestic semiconductor makers and turning it into an actual stake in the company so that the U.S. government is a 10% stakeholder in Intel. It's remarkable. It just shows the U.S. government almost as an activist investor in the private sector. We just have never seen something like it. Very, very interesting. I mean, the backdrop is you want these chip makers to succeed. Chips, of course, are the brains of computers, everything from cars to airplanes to toasters. So you want the domestically made chips to succeed. This is the U.S. trying to have a stake in that.
All right, Christine, appreciate you breaking it all down on a Saturday.
COVID supply chain issues all sort of revealed these problems not too long ago. Christine, appreciate it very much.
Hey, thanks for watching. And don't forget, you can catch the Today Show every morning on NBC or take Today when you're on the go. Just follow the Today podcast on Apple Podcasts, Spotify, or wherever you listen.